This is how I started looking at the market from a week-to-week basis as a day trader. The way I look at it is nothing new here. ICT's been saying this for a long time, but saying it and seeing it from your own eye is very different. So you look at the previous week's range. So if you look at it last week, June 2nd, this was the range that was created. Monday low, Thursday high. Now, going into this following week, we're casting forward, if you would say. We're going to see how this price action works. Obviously, on a monthly level, we're bullish, right? On a weekly level, we've been very bullish. Yes, there's going to be down candles here to delineate bearish weeks, but overall, this movement is very bullish. And then obviously on a daily, we have a bullish trend here as well. Now, in order for us to be a day trader within the weekly range, we have to look at a 4-hour chart. And the reason is 4-hour chart gives us those day by day, hour by hour break of what's going on. So if you extend out this line, or if you want to draw lines here to show how we're going to trade this is the weekly high. Well, we reached that weekly high on a Monday. What are we doing inside that weekly high? We are at best consolidating, right? Now, obviously this high was created on Wednesday, and I didn't have that high highlighted, but I kept, so this was my consolidation box. Going into each day, I would just extend this consolidation box, making this high, making this low, and then on Wednesday we created that high, and then I extended that as well. Now if you look at it, we have consolidating inside that range here, which is above the previous week's high on a 4-hour chart. Nothing real breaks yet. We've been taking highs and lows. I took a trade here because I thought we had, on Wednesday, this was the up close candle that I looked at. Now, for me, this up close candle became the run on liquidity here. So this was the candle I started looking. Why is that candle an up close candle a liquidity? Because we were at relative equal highs here. We extended up and closed below, back in that range here, right? For me, this candle is a reversal candle. CRT talks about how there's only 6 ways a candle can form: an up close candle, a down close candle, right? Dojis, up close dojis, down close dojis, and then wick above is going to cause you to go lower, wick below to cause you to go higher. So for me, this was a 6 o'clock candle, which incorporates the 9:30 and a 10 o'clock, the opening range prices as well. So if you look at it on a half an hour chart, this Wednesday candle was right at 8:30 news, right? We had news at 8:30, and this one grabbed the liquidity, and we had a change in the state of delivery here right at 13:30, right? So I entered somewhere around here hoping to take profit at the midpoint of this week, but obviously that push never came, right? So that push came, we retraced up on Thursday. So London, Asia and London, we kind of consolidated here. We moved up in New York, up into that order block right there. So if you move this line into that order block, rejection here, and then flush going into Asia on Friday. So that's how I started looking at the market. This was an example of how in a bullish market we took the previous week's high and then we came down to the midpoint of that range from the previous week. There will be cases where we, in the Monday, Tuesday, we are in the midpoint of the week, and then we can either go up toward the highs of the week as our take profit objectives, or consolidate around the midpoint and go lower, right? Obviously, those are all possibilities. This one, the second possibility would have been that we break through these highs from the previous week, right? We break through them, and then we take a continuation from the fair value gap or an order block that was to be created on 4-hour chart. But in this case, this was the purge on the liquidity above the weekly high and then down to the midpoint